If you guys like how I do my chart analysis on YouTube and you want to learn how to do it yourself, click the link below to check out the Vee Trades technical analysis course. What's up traders, this is Vee Trades and today I'll be doing a technical analysis breakdown for NIO with the ticker symbol NIO. If you want a chart analysis guaranteed to be done, please read the description below. Also take a second to give the video a like and subscribe for more chart analysis, I appreciate it very much. This video is for entertainment purposes only, does not constitute any financial advice. I will first go over what I see in the daily chart and finish the video off with the weekly chart. So it looks like the market had a nice pop up today, especially these Chinese stocks. You can see that NIO had a 3.42% gain. However, I'm not that excited or compelled that we have bottomed. You can see that we've been going down since November and even previously before that. So this November downtrend is pretty strong. It's a nice healthy angle that the price action is moving inside of. So this is the downtrend that prices were respecting. So if I put a channel, you guys can better see the downtrend working. The price action was being rejected from the EMA and we're making lower lows and lower highs. Eventually we're going to break the pattern, and that's exactly what we did when we came up short on this side of the channel, which shows signs of weakness. And then we had a blast up and had a breakout side of the pattern, but normally the first break of the pattern is going to fail, so that's why we started going back down to the previous low. And looks like NIO's still in the process of doing that. So just because we had a pop-up today and had a nice big green candle bar, we have had that several times before in this down move, just this small down move, and a lot of green candles in the bigger grand scheme of things, but we still continue lower. So we had a nice pop up, which is good. However, since the pattern has not finished, that's why I'm still looking for lower prices. You can see that we had this nice pop up today. However, it's a breakout, so most breakouts fail. So especially if it's the first one, you can see that we were kind of consolidating and going sideways. You could even consider this still inside of the range. So right now we were traveling sideways instead of in a up or down direction. So this is some sideways action. So this is the first break, which could go out a little bit more, and then we could just turn around and fail and go back down. There's a huge gap right here that has not been filled, and to fill it we reached the $14.91 level, and looks like price action only came to the $15.96 level, and we have not even made a new low of this downtrend to complete the pattern. So there's still a couple factors leading me to believe that we will continue lower, and the cherry on top is this measured move target, which is also right at the $14.41 level. So I'm looking for this gap to be filled, and I'm looking for a new low of this downtrend to be made before we start seeing higher prices. Now, does that happen all the time, and is it 100% certainty that we're going to do all this? No, the market is not 100%. I believe that's just more probable. Could we make another leg up, another large leg up? Yes, that's likely. You can see that we had this huge move up, and if the entire market starts pulling back, most likely these emerging market stocks will also pull back, and we could reach the $26, $27 level. So that's not completely out of question. We'll have to wait and see just how bearish this market is. We have not seen any large moves to the upside, so that's why it's not likely, but I'm just letting you know that it is possible. So what I think is going to happen is, yeah, we could pull back, maybe back up to the $23, $24 level, maybe even the $26 level. If the entire market continues to pull back and the S&P 500 has bottomed, we could definitely see much higher prices, and then we'll need to reevaluate if we're starting an uptrend or that was just the end of the correction and we're going to go back down to lows. As of right now, things are still looking bearish. That's why I'm not super excited about Chinese stocks. I believe American stocks will bottom out before emerging market stocks. So I still think Chinese stocks have maybe several more months to go before we start seeing a bottom in place. So I'm looking for the $14 target, and then eventually the $12 or $13 target to be reached, because it does look like we're traveling down. We took a little break, and now we had a failed breakout. We could get a failed breakout right here and can then continue lower. So I'll have to wait and see. So that's my analysis for NIO on the daily chart. Let's go and wrap it up on the weekly chart. Here we have the weekly chart for NIO, and you can see that since 2020 we had a massive run up, and now we're slowly starting to take back what was given from the market. You can see that we had a nice pop up since the $3.51 level all the way to the $66, $67 level in a span of you could say less than a year. So that's a very unsustainable move, especially for stocks. And it looks like we're just slowly grinding back down to the starting point, and that's normally what happens when these bubbles pop. So the starting point is right at the $3 level, but we don't have to come back all the way down there. We can come back to the $10 level. That's where the breakout is, and a gap that could be filled. There's a little empty space right here that could be filled. So I'm looking for price actually pull back maybe to the $10 level eventually, because you can still see that the grand scheme of things is still a downtrend. So that's why I'm looking for these lower prices. You can see that connect the swings, drag this over. Looks like we're in this channel, so we're still below the EMA since pretty much the start of this year. So it's really nothing bullish on this chart, even though if we do see a couple green days or even a green week, that doesn't mean we're going to reverse and go back up to the highs. It's still just a long way and a slow grind before we start seeing something. So if we do get that measured move up, could reach that $26, $27 level. It would make sense because it looks like we did come up short on this side of the channel, which could lead to a break on this side of the channel, and then maybe that flush down, just like how we saw on the daily chart. If we get the first break of the yellow pattern, doesn't mean we're going to reverse, but that doesn't mean we can get a breakout either. If we come up short on this side, we could just get rejected for the EMA and then continue lower. So as long as we're still inside of this yellow channel, I'm still going to be bearish, and even if we get a break and we still continue lower, so still a long way before we see some bullish signs. As right now, it's better than what we were back here, because it looks like the downtrend has played out more, because we're getting closer to a point of reversal. But it's still, I believe it could be Q3, Q4 before we start seeing the pattern play out, and then we see reversal. So you just gotta be patient, especially for these emerging market stocks. That's all I have for NIO, and I'll give you guys an update if anything else changes. Thank you for stopping by and checking out my video. Make sure to check out the rest of the channel, since you might be surprised at what you could learn. Leave a comment down below on where you think prices are headed. Also share the video if you want your friends to learn about the markets. Lastly, I appreciate any feedback to help improve the channel, since I want to deliver great content to you guys. See you next time, and bye.